A little bit about my background. I broke off with a couple of friends of mine to start Redwood City about a year ago. We had spent a number of years at a private equity firm in the Bay Area doing leverage buyouts in tech companies and non-tech companies across the United States. And we focused on the technology aspects of those companies. We focused on e-commerce aspects and social media. And of course, we were investors, so we're looking at financial aspects of them as well. But we realized something with Bitcoin, and I'd like to try to take you through that today and see if I can convince you of an argument that we put forward about a year ago, and it relates to mainstream adoption for Bitcoin. So without further ado, let's jump right into it. This is a diagram that illustrates what we feel is a winning combination or a winning recipe for explosive growth in a product. So if we put our product marketing hats on and we're looking at the pros and cons of a particular product, whether it's Bitcoin or anything, there are some time-tested and proven methodologies for analyzing the strengths and the weaknesses. And these three elements, the elements of e-commerce, the elements of social networking, and the elements of monetary factors. Now, there are many other factors that come into play with Bitcoin, whether it's politics, whether it's database design, whether it's cryptography, but it's these three that we see from a product marketing perspective that are the key elements or the key recipe for explosive growth. And that's what interests me personally as well, and convinced me to focus on Bitcoin and blockchain ecosystem exclusively. So here's our argument. It's got three pieces. The killer app, as the title alludes to, is really just another way to say, are you going to achieve mainstream adoption? So a killer app is Instagram, a killer app is Snapchat, a killer app is Uber. But really, what's the common theme there? The common theme there is a product that gets designed, that achieves product market fit to a point that it attracts large numbers of mainstream customers to spend money on that platform. So what's Bitcoin's killer app? Well, there's a lot of great apps in the Bitcoin ecosystem, but ultimately our belief is that Bitcoin is Bitcoin's killer app. We believe that Bitcoin is the best form of money that's ever been discovered or devised or created by the human race. So if that's true, then maybe we should evaluate our resources, we should rally our troops together, and we should try to take that product, try to take our pre-existing killer app to market. There are, as we'll go through, there are well-established methods for doing that. And I'm going to need to speed this up because we've got 20 minutes, so I think that I gave a dry run at this to a friend of mine, and we got into questions that took us quite a bit longer than that. So anyway, let's support the argument. We made 3 points. Here's the support of that argument. We're going to analyze the whole of Bitcoin as a single product, as I mentioned. And then we're going to discuss our thought process for the effective tactics that exist that you can draw from in other parts of commerce and other parts of the online economy that can be applied to Bitcoin to achieve this goal. So there's 4 steps to that: root questions, finding the key evidence, drawing your actionable conclusions, and then creating and executing your go-to-market plan. But the first step is asking the key questions. What are the first principles? Some of this may seem like rehashing ground that we've all known for years, but in reality, asking questions or doing things that you've done time and time again can yield new information, can yield new solutions to problems that you've been struggling with. Now, I'm reminded of my childhood. I grew up ski racing in Michigan. And every year, our coach would do the most frustrating thing for us. We were all talented ski racers, and we felt so great about our skills and our abilities. And yet, for the first week of every season, we didn't get to run through gates. We were forced to snowplow down the bunny hill for an entire week. And we said, his name was Sven Olsen, so it's like the ultimate ski coach of the ages. Why do we have to keep doing this basic stuff that we see the 3-year-olds doing? And his answer was always the same. You just have to go back to the basics. And the reality is, with all of the progress that we've made in the Bitcoin ecosystem over the last, we just had the 8-year anniversary of the first transaction from Satoshi to Hal Finney last week, right? We've made incredible progress. We've made incredible progress in that time, but we still haven't achieved mainstream adoption. As you'll see shortly, there's only, I don't want to diminish it. There are 500,000 people around the planet who own at least one Bitcoin. And if you think of the total addressable market for Bitcoin, it's inconceivably larger than that. So anyway, these are the first principle questions. Let's dig right into them. So what's our current situation? As I said, we've got 500,000 people with one Bitcoin. We've got a Bitcoin price that it's impossible to peg on a PowerPoint slide because it's bouncing around so vigorously each day. We've got about 300,000 transactions per day that are going across the blockchain and a couple of million Bitcoins that are getting traded on the global exchanges. We've got some developer turmoil that we don't need to worry about in this forum, my speech anyway. And we recently had a crackdown on some Chinese exchanges. So that's where we're at. Let's set the level and move on. So our goal is to reach 1 million people that own at least one Bitcoin within 24 months. And we believe that if we can do that, that we really have achieved mainstream penetration. But how are we going to convince those people to do that? The way that you convince somebody to take an action, to pull their credit card out of their pocket and spend money to hook up their bank account to a Coinbase account, you have to focus on the emotions that will elicit the desired behavior. So here's a guy, Abraham Maslow, mid-20th century, I guess, a sociologist who developed his hierarchy of needs. And it's our belief that while the top of the pyramid here, self-actualization, is noble and it's great, if we're to launch Bitcoin to a mainstream audience, we need to lower our message a couple of notches on this hierarchy. We need to get down to safety. You see the little dollar bills there. We need to focus on what Bitcoin offers to our target market in terms of their financial stability and their financial safety and their financial futures. All right, another first principle, product market fit. What does that even mean? Well, I operate in Silicon Valley, and so does the rest of my team, and we've spent years there building minimum viable products and trying to work diligently to identify a target market and build a product that will actually solve some problem for that target market that's compelling enough that they will download the app or that they will give you some money. And you never get it right the first time. You come out with an MVP and it's a total flop. So you tweak it and you iterate and you iterate and you iterate. And then if you're lucky, you achieve product market fit. But there's another way to achieve the same fit. The market can move to your product. The market can move to your product. And if you look around the world today, you'll see that many of the changes that are at play in many of the governments and the incumbent financial system are pushing people in Venezuela, in India, towards the product, the amazing product that we already have today. What is Bitcoin? It may seem like the most ridiculous question that we've got here. What is Bitcoin at a Bitcoin conference? But it's an important question because it allows us to craft the message that we need to go out to our target market with, to elicit the emotions that will convince them to take the desired action that we're looking for. Bitcoin, as I mentioned earlier, in our opinion, is the best form of money that's ever been devised. But what is money anyway? Well, it's three things in our opinion. It's a unit of account that allows you to compare the price of one thing versus another. It's a means of exchange that allows two people to execute a transaction for goods or services. And it's a store of value, which allows people who have a surplus of earning power to store that surplus over time so that they have something for their future, so they have something for their progeny. And this is the next interesting question for us is how can you compare different forms of money? So why do we think Bitcoin is so great? Well, there's 6 characteristics that people use to compare forms of money with each other, and the acronym's SDDRFT: scarcity, durability, divisibility, recognizability, fungibility, and transportability. And we don't have too much time to study each one of those, but let's just go quickly into a visual representation. So this is the SDDRFT score that we gave Bitcoin. We gave it a 22 out of 24. We're obviously Bitcoin fans, but let's try to objectively compare it to a few other forms of money. So I don't know if you can read this, but in the upper left, you've got gold. Moving on to US dollars, Argentinian pesos, frequent flyer miles, cowrie shells, and Starbucks cards. They're all forms of money. And you can compare and score each one of them according to these same criteria. And then you can say, well, what is the moneyness? What is the moneyness of each one of these forms of money? And you can see the results here, plotted in a different way. And so we believe that Bitcoin has excellent moneyness. And what I'm working towards here is the sales pitch for a go-to market strategy for one company. Imagine Bitcoin is one company. We're obviously not. We're a patchwork quilt of initiatives and use cases and funded ventures around the world, but ultimately we're all going to succeed or fail together with the adoption curve of Bitcoin. So let's get Bitcoin to 1 million customers. I'm not going to spend too much time on the transactions that Bitcoin can improve, but let me just say that there's plenty of space for Bitcoin. There's plenty of space for other cryptocurrencies, for other public blockchains, for private blockchains, for permission ledgers, everything that you heard Jeremy talk about a few moments ago. Because the fact is that the financial services industry is one of the largest industries on the planet. It's over 10% of US GDP and growing. We believe that Bitcoin is great for consumer to business and consumer to consumer. Now, moving on to our go-to market strategy, who are our target customers going to be? Because when you look at the way that Bitcoin was launched, it hit the internet simultaneously around the world, and at one moment, anybody that had internet connectivity could participate in that network, and that's an amazing thing, but it's a very difficult thing to launch a marketplace like Bitcoin around the world at one moment. If you look at the way Facebook launched, it's the largest country on the face of the planet by population. But it started in one college dorm, and then it expanded to a few college dorms on the same campus, and then it expanded to a few colleges. And the reason that they did that, whether it was deliberate or subconscious, the reason that they did that was they could maintain a full room. They were never plagued by the empty room problem. They always had a critical mass of people who knew each other and would interact with each other on their marketplace. And that's a difficult problem to solve for marketplaces, and it's a challenge that we have in Bitcoin. So let's look at individual investors. Individual investors, we've talked about a lot of the benefits to an individual investor. Bitcoin's a store of value. It's a completely non-correlated asset class. The return profile is incredibly asymmetric. I think we've got a stat in here a little later. I'm not sure whether we'll get to it, but just 3 or 4 years ago, if an individual investor would have put 1% of their normally balanced portfolio into Bitcoin, they would have doubled their portfolio. That's a wildly asymmetric return profile with no upper limit, mind you. There's no PE ratio that would limit the appreciation of Bitcoin like so many other, debt-based investment instruments, public equities, and so on and so forth. The cash flow for an asset class like this is irrelevant in many ways. So then we've got SDDRFT. We've got portfolio diversification. The scarcity is inconceivable if you think about it in the context. Here's a few charts on asymmetry, on the non-correlation of asset prices. I'm not going to bore the group with this, but please do reach out to us after the session. We'd be happy to share this. We'll post it on SlideShare, we'll email it around or what have you. Okay, moving on. This is the president of the Federal Reserve Bank of New York, a gentleman by the name of John Exter. And you can probably read his quote. It's a bit ironic coming from a Federal Reserve Bank president, but he also developed what's now called Exter's Pyramid, with the quality, in a way, with the objective of depicting money and its relative abundance in the world, coupled with its relative size. And you can see at the bottom, he put the power money, gold and silver. Obviously, this was before the internet. I mean, he put this together in the 70s or 80s. But it's our belief that Bitcoin holds its rightful place at the bottom of this pyramid, which makes it very valuable money. We've got great performance as a currency, if you want to think about Bitcoin as a currency. This is 2015. 2016 made 2015 look like child's play. The bottom line is that the appeal to the individual investor, and there are hundreds of millions of these people around the world right now that are putting money into stocks, putting money into bonds, and haven't bought one single Bitcoin yet. But this is the best sales pitch that they would have ever heard. So let's do it. So what resources do we have in order to affect that? Well, we have $500 million a year in mining revenue. We have 18,000 people that hold Bitcoin wallets with a sum total value of 10.3 million Bitcoins. That's an incredibly concentrated store of value amongst the Bitcoin market capitalization or monetary base or whatever you want to consider it. And then we've got the 500,000 people with at least one Bitcoin. So there's real resources here, especially in the context of a user acquisition campaign or a customer acquisition campaign that's only trying to get 500,000 people to do something. So, a thought experiment. Imagine that you take a small percentage, and I know that this may be an eye chart to everybody. Imagine that you take a small percentage of that mining revenue, 5%. And imagine that you take 0.3% of the holdings of the 18,000 Bitcoin wallets that exceed 100 Bitcoins in value. Well, you've got $50 million. That's 50 million. And with our experience in customer acquisition campaigns for other online businesses and e-commerce businesses and products and so forth, we know that you can acquire customers with a sales pitch like this at a price that's far less than $100 per customer, which is what we've got. And what would happen if we were to do that? Well, maybe we would start an upward trend in Bitcoin price. Maybe the price of Bitcoin would grow by 50%. Maybe it would grow by 100%. It's really hard to tell, but it's our sincere belief that we'll start a virtuous cycle that will feed into the value proposition of Bitcoin itself. And the resulting return on investment for the participants and for, in fact, everybody that's involved in the Bitcoin ecosystem will be enormous. You can see this chart here. It's a 28,000% return on investment, which just isn't available. I can tell you, even as a Silicon Valley venture capital investor, this type of opportunity is not out there. And so how can we do it? How can we execute this strategy? There's a variety of well-proven methods for doing this, ranging from direct referrals, starting with a small geography as we discussed, and so forth. There's proven methods for spreading a viral message. There's ways to measure viral growth with your coefficient of viral growth. But let's look at a quick campaign. So we target investors that have over $40,000 of investable capital, that have an online brokerage account, smartphones, under 50 years old. We target 9 geographic areas that are all very addressable. And we give them the pitch that we've just gone through. And how do we give that pitch to them? We utilize something that's ubiquitous online in the United States, which is an affiliate marketing program. We pay commissions to the referring parties that bring new customers into the mix. We have the money to do it. We have more than enough resources to do it. And we believe that it'll set up a virtuous cycle for our whole ecosystem if we start it. Budget, schedule, well, we talked about the budget. Even if we stretch this thing out to 1,000 days, the new customer demand from a campaign like this, spread across these 9 regions, targeting just 500,000 users, and this goes back to the scarcity, is going to absorb 60% of all of the new Bitcoin production right now. That's 1,800 Bitcoins a day. That's why we are so convinced that we'll set up a virtuous cycle. It's because of this price elasticity of supply. We don't have time to go through it, but I can talk to you about it later. There's well-proven methods for iterating through and optimizing our marketing campaign. Eric Ries put out a great book a number of years ago called The Lean Startup. We apply those strategies to our marketing campaign, and we look at the right metrics so that we execute validated learning. There's some risks. We've seen one of the biggest risks, in our opinion, over the last week. It's this regulatory crackdown. What happened? We saw the price of Bitcoin explode during November and December and the first, 3 days of January? And what were the reports put out by the Wall Street Journal, CNBC, MSNBC, Forbes, The Guardian, New York Times? They all talked about how it was fueled by speculation or it was fueled by concern regarding global currency turmoil, problems in China, capital flight. And what happened 2 days after those articles came out? Well, the People's Bank of China issued stern guidance and initiated on-site inspections at all 3 major Bitcoin exchanges. So for us, the risk of regulatory crackdown is by far the biggest risk that our ecosystem faces. A quick last slide to put things into perspective, and this relates to the capital flight stories that you may have read about. Bitcoin's there at the top, and this is visually to scale. It's that tiny gray dot inside of that tiny white box. All the world stock markets are $70 trillion. All of the broad money supply globally is $80 trillion. And there's Bitcoin, and that, by the way, is all of the Bitcoin, the theoretical market cap. That neglects the fact that the available Bitcoin for sending capital across borders is, we believe, about 1 million Bitcoins. So that's 1/15 or 1/16 of the total. So it would be tantamount or equivalent to filling up your swimming pool with a teaspoon by taking 1 teaspoon at a time of water out of your neighbor's swimming pool. It just isn't possible and it isn't practical. And I hope that if anybody in this room talks to the media, we dismiss this possibility of capital flight using Bitcoin as we should, because it just is not practical. Private blockchains are not a risk. And then here's the conclusion. Bitcoin is already wildly attractive to hundreds of millions of people. We have these incredible resources. There are many proven go-to-market strategies from experts in other businesses and vertical markets and other types of products that would be applicable to here. The 1 million customer campaign that we're describing to double the size of our customer base is incredibly practical. The ROI will be enormous for everyone, and in fact, what we believe, maybe ironically, is that, getting back to the title, the killer app, the best thing that we could do for Bitcoin today is to bring more people into the fold. And that's everything that I have for you today. I don't know if we have time for questions. That might be the end of it.